Before we even touch on whether the pre-construction condo units reach the bottom pricing, let's look at where are the Canadians in this whole Toronto condo story. Toronto condo market went from supposed shortage of inventory to a major oversupply. We have roughly 78 months of the pre-construction inventory right now, and we sit at almost 7 months of the resale condo inventory. The shortage narrative, which fueled years of building and speculations, was never really about homes for Canadians, but more about the speculative demand. Foreign investors, local landlords, corporations, and bulk buyers drove the frenzy, while Canadians were often priced out. Fueled by the FOMO, fear of missing out, lax government oversight, ultra low interest rates, soaring rents, international student demand, and substantial pandemic savings, the market spiraled upwards. Builders profited from rising costs and high prices, but now the cycle has flipped. The real victims are ordinary young Canadians and families left struggling under the weight of unaffordable housing while the speculators moved on. But the story took a sharp turn almost overnight. Inflation spiked to 8%, and the Bank of Canada overnight rate rocketed from 0.25 to 5% in just 16 months. So, on top of that, the government introduced a series of new rules and tax hikes, further reshaping absolutely the buyer's behavior. The full impact of those policy changes completely deserve its own discussion, and we won't talk about this right now. But what followed was inevitably turbulence, particularly in the condo market, and even more so in the pre construction segment. So, saying that, let's take a closer look at the numbers. So, the cost of buying a pre construction condo in Toronto is showing signs of easing, with some projects now launching at the minimum their lowest price points in years. So, recent market data indicates that the minimum price for pre construction condos in the suburban areas is now around 1,100 per square foot, while the core Toronto area is still holding at around 1,500 per square foot. And this chart is actually indicating what is the current price for the pre-construction units, under the construction units, and the units that had been completed. So as you can see, despite about 4% drop in the pre-construction cost, the per square foot compared to what we had in 2024, developers face a floor that they cannot go below. So land fees, labor and consultant costs, material expenses, government charges are largely fixed. And also developers may have some profit margin, which typically ranges between 12 and 20%. And they're actually obligated to show the banks that they do have sold 70% of the units before they're eligible to get any bank mortgages. So one of the largest cost pressure comes from the development charges, which have surged significantly over the past 15 years. These are municipal fees intended to fund infrastructure and services and have become a growing source of revenue for governments. While critics argue that charges have contributed to the affordability challenges, reforms have so far been limited. Developers can trim the quality, adjust overhead, or accept smaller profit margins, but they cannot drop below their economic bottom line. And for that reason, analysts say substantial reduction in pre construction pricing is remaining very unlikely. So take a look at the changes in development charges since 2015. So even with this modest price relief, I mean, in the resale, even a more significant price relief, but in the pre-construction, the affordability still remains a concern. A 600 square foot condo in a suburban area can cost now about $660,000, while in a similar unit in downtown Toronto can be even like $900,000. And for the comparison in the resale condo prices, so remember we are talking about the new construction and the resale. So in the resale condo prices, the cost per square foot currently sits about $800 per square foot, and this is down nearly 24% from the market peak in 2022, but it's still higher than the late 2020. So the buyers who entered the market in 2020 today may be break even, but while the ones who purchased the units before 2020 are more likely to have seen positive returns. And then obviously assuming that there is no major special assessments and the unit is in good condition. So this is an interesting chart with a couple of points. So the new data shows that there is a notable shift in the buyer's preference. The small studios, once the most expensive per square foot and the popular with investors, actually have lost the most value as international students demand fell sharply. So they were the ones occupying those smaller units mostly. In the contrast, the larger 2 plus den units are holding their value better. And I'll tell you why. Because the new families that cannot afford to buy homes gravitate toward the actually livable units. And those are the units that they prefer to buy these days. However, interestingly enough, also is that some investors see the huge opportunity now to go back maybe on the market and buy like the property and hold it for the future needs. And we see a huge increase in the units that are listed under $500,000, and we saw 47% jump in activity for those units. So that gives us an indication that maybe investors are kind of slowly coming back to the market. The in July, the GTA condo market recorded 6.4 months of inventory, and this is the level we haven't seen in years. So just to remind you, this is the resale condo market. In the pre-construction condo market, we see 78 months of inventory. So while the sales volume have dipped slightly over the past 12 months, the surge in active listing has pushed inventory levels sharply higher. So a balanced level of active listing in GTA would typically be about 4,000 to 4,500 units. Today, that number has more than doubled. This surge is largely driven by the steady stream of the new condo units hitting the market each day. So to be clear, it doesn't mean that we suddenly start building more. Far from it. What we're seeing now is the delayed result of the years of the housing shortage narrative, which spurred a wave of the construction focused on a small, non-family size units. The slower demand and massive inventory to choose from obviously caused the prices to drop. As you can see in this following chart, the prices now set in the resale market, not in the pre-construction market, at $6,501 per square foot. Sorry, 6,501 in average prices, which reflects in about maybe $800, $700 per square foot, as we talked about earlier. And that is about the level that we have seen in between 2000 and 2021. So the GTA condo market has swung from the shortage to oversupply. In Q2 2025, only three projects launched, while 21 were canceled, leaving about 20,000 unsold units, and God knows how many more we're going to see in the next year or two. Demand remains really weak. New immigrants lack the buying power. Young Canadians face stagnant wages and high mortgages still, and investors see little incentive in a short rental yields still. So the housing are needs and it won't disappear. Lower interest rates, hopefully, the return of international students, and changes to foreign buyer policy maybe can gradually restore the demand with stability possibly in 2028. We do have probably a couple of more years of really tough condo market. And however, this recovery, as I mentioned, will won't happen on its own. The policymakers must take a smarter, phased approach, reducing taxes, consulting industry experts, not just politicians, and coordinating with the builders. Otherwise, the cycle may continue. However, this market, obviously, as every market, provide plenty of opportunities for the certain buyers, the downsizers, and even the first-time home buyers. After all, on the long run, it's always better to be an owner than to be a renter. I hope you enjoyed this video. So if you have any question, please don't hesitate to reach to us, TNT Real Estate Solution. Thank you.